Hello everyone, this is your host Vaibhav. I welcome all of you to today's stream of Daily Stock, in which we are going to look at the prospects of the global coffee chain, the Starbucks. And I am quite sure that many of you would have had coffee in its one of the stores, which it has presence across the world. We have more than 38,000 stores of the Starbucks spread from Japan in the east to the US in the west, and it has been adding more stores to its actually big presence. And even in the last quarter, it has added more than 800 stores as the company has been profitable with the revenues at record high for the last quarter, with its net revenue, net profit also rising more than 30%, and with it the company has been able to sustain its growth, sustain its expansion. But this positive momentum is missing in its share price. The share price is now seemingly in decline again with this bearish turn. I think for the next couple of weeks and maybe next couple of months, the things are not really likely to change much on that count. So we are going to consider its fundamental as well as technical aspects to see if there are emerging opportunities to trade and invest. First, we will consider its earnings report for the last quarter, that is the quarter ended October 1st, 2023. The company reported net revenues of $9.4 billion, and these are approximations. The precise numbers you can always get from the actual earnings report, which is available on the investors relation page of Starbucks. That means the Starbucks revenues rose 11.3% from 8.4 billion of the fourth quarter of year 2022. And if we look at its operating expenses, the operating margin has risen, with this net income rising to $1.219 billion from $838 million for the same quarter a year back, and that translates to almost 39% growth in the net income, which is quite astounding, quite good. Having seen these earnings report, you would expect the share price to have risen, and it did. After the release of the earnings, the share price of Starbucks was on the rise. It continued to rise for a week or two, but after stabilizing on the higher side, it changed tune, and now it is decline again, and we will turn to that. Prior to that, let us look at the cash flow statement as well to see how the company is spending the cash it is generating. This is the balance sheet of the company with this, and if we look at the cash flow, the net cash position of the company is quite good, with it having the cash at hand of $3.5 billion, and it has seen the increase of 733 million in the last quarter. These are quarterly numbers, and if we consider the same cash flow statement for the period of a year back, it had seen substantial decline of more than $3 billion, which had brought its cash reserves to $2.8 billion, but now it is seeing increase in its cash and cash at hand. So overall, these points to the comfortable position the company is in. in terms of its business operations as well as its liquidity. And in near term, there is not much of an challenge which the company is likely to face on that count. But the macroeconomic environment still remains challenging, and its business is likely to face some headwinds on that account. But overall, the company is in a comfortable position. So we now turn our gaze to its share price. This is the daily time frame charting for the Starbucks shares. If you consider the scenario after seeing the peak of 115 in the month of May, the formation has been of lower lows and lower highs. This surge made it look like that bearish undertone was now going to end, and we might see a bullish turn of event for the Starbucks, but that didn't really materialize. And after this surge again, the Starbucks share is not really far off from its October low of 89.22. And right now, as we see, the momentum remains largely bearish. So if you have this formation, and if you think about going for a new investment, you will have to think twice, because even if we enlarge the scenario to longer term with this charting turning to weekly, the formation is still not of higher highs and higher lows. It was, but after this peak established in 2021, it had given up almost half of its market value. From there, it did recover, but on these higher levels of around 100, again it is seeing selling pressure. So we will have to be cautious here and see how the share price evolves over next couple of weeks, and only if it finds support closer to this immediate swing low, I think we can expect some sort of recovery, retracement on these lower levels. But broadly speaking, the bullish undertone is missing, so I would not really advise any longer term investment in its shares as of now. And as we consider the medium term charting as well, the prospects are not that good on the higher side. But if you are also keen on exploiting opportunities to short sell, then in that scenario, keep an eye on its near term price action, and if it breaks below this prior swing low of 89, I think in consolidation phase, if it stabilizes somewhere below 95, 96 on these levels, we can indeed think about short selling. And maybe in due course of time we will see it decline towards 85 or thereabout, or even below that. So that possibility is there, but for that we do need it to keep in this bearish zone and not really rise much beyond 96, 97 levels on the higher side. And its near term formation needs to be of lower lows and lower highs, so keep an eye on it, and maybe the short selling opportunities will come our way. Now if we have to look for the near term opportunities, the short term opportunities, here also I think we will do well to keep looking for short sell rather than for the long trade, for the buy trade. So given this continuous slide, I think even if we had gone for the short sell trade from the short term perspective over last couple of weeks, we would have made a quite good amount of profit, as in the consolidation phase it did provide opportunities couple of times. And even here As I said earlier, while looking at the daily time frame chart, the price level of around 95 is going to be the immediate level to watch out for on the higher side. Currently, it is trading close to 93, and with this formation of lower lows well established on these hourly charting, all we need to do is to see that these current retracement doesn't really surge past these immediate swing high, and if it doesn't and stabilizes and spends couple of hours around here, maybe in a session or two the newer opportunity is likely to emerge for us, particularly on Monday. See how things evolve, and in the scenario that there is no fresh momentum on the upside, we can indeed go for the new short sell trade with the expectation of further dip below 90 or that level in next couple of sessions by maybe Wednesday or Thursday of the next week. We can expect to wind up our trade on the profitable side if we are right, and of course on the losing side if we get it wrong, but the risk reward ratio is indeed favorable, so that will be the price setup to watch out for. And with this, I think I'm now nearing the end of this stream. And if you have any query or any idea to share, do write to me in the feedback, and I would be more than happy to take the discussion forward. We have considered all these three different time frames: the short term, the medium term, as well as the longer term. And depending on the time horizon you have, you can consider these different time frames as per your requirement. You should consider the current bearish phase to be of more of an consolidation with bearish bias instead of downright bearishness. So this sort of decline is not really expected in the current environment. Maybe it will keep oscillating in these 80 to 100 price zone in near future. That is my expectation, rather than a decline towards this prior low of 68.70 price level. Now with this I'm wrapping up the session. Thank you all for joining in. Have a fabulous day ahead. See you next time around. Till then, goodbye.